Are you looking for the real reason traders succeed? Not some fancy indicator or trading hack, but the fundamental reason that traders have been elevated to long-term trading success? If so, you're in the right place. In this limited series called Trading Triumphs, The Journey to Success, we're going to analyze the journeys of successful traders and really dig deep into what's made them successful. We'll take a look at the stories, the struggles, and the successes. We'll also look at the defining moments that have forged their trading career and the timeless principles of success and trading that we can leverage ourselves, plus some fun, laughter, and maybe tears along the way too. This won't be the usual what's your favorite indicator style of interview. This is going to get personal. So let's get to it. Adrian Reid, welcome back to the show.
Andrew, so good to be back. Great to be here. Thank you.
You've been a guest of the show a number of times already, actually. The last time, I looked this up, the last time you appeared on the show was, can you believe this, November 26, 2021, almost 2 years ago. Yes, 2 years ago. So it doesn't feel like that long ago. How are you?
Oh, great. Thank you. Yeah, pleased to be back. Love the show. So I'm super pleased to be on again. And look, there's so many interesting things going on in the trading world and in my own trading. Perfect time for a chat. So really pleased to be here.
Excellent. So for anyone who wants to see my previous discussions with Adrian, episode 147, actually, we talked about building trading strategies with confidence. That was a really good episode. And episode 206, systematic crypto trading strategies. So you can go and check those out on Better System Trader if you want to see more from Adrian. But in this episode, so this is actually in those episodes, Adrian talked a lot about the tactical aspects of trading. But this time, we're going to go a little bit deeper. We're going to go a bit different. We're going to, really uncover the path that led to your trading success and look at some of those defining moments that really, steered you and kind of go a bit deeper on those and see what we can hopefully discover for ourselves as well on our own trading path. So how does that sound? Does that sound good?
Yeah, sounds brilliant. I mean, as we sort of talked about before hitting record on the episode, I think this is really important for people to understand because we can listen to these interviews. It's like, yeah, I do this and I have this strategy, I have this portfolio and it's all great. But it's like, that's 10 years down the line. But you've got to get through so many psychological challenges before you get to that point or on the way to getting to that point. And I think it'd be really great just to dig into that because if the listeners can get through some of those big challenges that typically take people out of the game, then we can really help them set up for success. I think that's pretty exciting.
Yeah, exactly. And I think as well, some of the things that we discuss on these shows, the tactical aspects change over time as well, right? Mm-hmm. So you could be listening to something that maybe it could only be a year old or a couple of years old, and it maybe doesn't apply anymore because things change. But I think by looking deeper into the psychology and the human emotion of what happens to us as traders as we progress on our journey, you can come up with kind of like timeless principles, which you can use no matter what the market is doing. So hopefully we're going to get some of that stuff from you today. I'm sure we will. So.
Let's do it.
Well, how about we start at the very beginning?
Yeah.
Can you, if you'd like to take us back to the moment where you first considered being a trader, like maybe we'll start with a bit of context. Where were you? When was it? What was happening in your life that made this become a factor or a decision that you were considering?
Sure. Okay, great. Thank you. Good question. There's two moments in time. I'll cover both. The first one more briefly because it's a little tongue in cheek. The second one is more serious. The first one is I remember I was 8 years old and I was sitting at the dining room table in my family's holiday home on the south coast of New South Wales. And that home had been, it was just a small cottage thing near the beach that we went to basically whenever we had holidays from school. And we often played board games. And the place had been rented out to some new people and they'd left a game there, or my parents had got a game from somewhere that we hadn't seen before. It was called the stock market game. And so we played this game. And it was just, for me, instant fascination. And we'll come back, like I think that idea of fascination will come back into this discussion later on. But it was instant fascination because you roll the dice, you'd go around the board, and it was an Australian game, so it was companies that I had heard of, even though I was like 8 years old. It's like, oh yeah, I've seen that bank. and you'd go around the board and you'd buy and sell stocks. It's kind of like Monopoly, except in the middle of the board, it had this sort of dial, this lever thing that moved up and down. And that was the cycles of the market. And each square you landed on, it said up 50 or down 5 or whatever. So you moved it up, and the stock prices of all of the different stocks would fluctuate according to where you landed. And to me, this was just like, what is this? This is so cool, because you can buy when it's here, you can sell when it's here, and you make billions. It's so good. And I was an 8-year-old playing this game. It's like wiping the floor with my family and massing this couch. Like, oh, this is it. Like this is the game. And so that was the first real, like, oh, this is the stock market, right? That was my first exposure. And I'm not one of these child prodigies. I didn't start investing when I was 10 years old and have $1 million by the time I was 18 and all of that. That wasn't me. But I studied engineering, and by the time so when I finished school, I went into engineering, and by the time I finished engineering, I was bored of engineering. And so I went into strategy consulting, which was great. Again, a fascinating sort of area, and really, good problems to solve, interesting things to think about. But I started work, and I very quickly realized I don't want to do this forever, because, all of a sudden I'm on a bus at 5:45 in the morning, going into town, or I'm in a taxi at 5 in the morning to go to the airport to fly to a different city to work on a project. And it was like this month after month after month. And so it didn't take me very many months of that to realize that I don't want to do this forever. And so I started looking for ways to escape. It's like I was 20 something, better escape from the corporate world, right?
Yeah.
And how naive. But, it does happen. It just takes a lot more time than ideally I would have liked. And so I had this conversation with my dad, and I said, look, I don't want to do this forever. Like, how do I retire? He's like, retire, you just started. And he still hadn't retired at that point too. So you can imagine that would have been an interesting conversation. And he said, well, look, you need money. You need to be able to support yourself. You need to invest. So, okay, I can invest in shares. I can invest in property. I can start a business. And having had that fascination experience from the game early on, I already was fascinated with the stock market. I just hadn't made the leap to kind of get in. And I wasn't fascinated with property. I certainly wasn't interested in running my own business, because I had no sort of background in that. And so stocks was the obvious thing to go to, because I already had that little experience that anchored me to it. And so then I just launched in. And look, there's a whole story about how do I get profitable from there. You may or may not want to go into that today. But from that point, I started researching, learning, buying things, losing money. And then 3 years later, I flipped a switch called systematic trading. And my equity went from going like this to going like that. And the rest is just time and compounding.
Yeah. So you said that you've flicked a switch to systematic trading. What was that switch? Was there like a catalyst that caused you to switch into systematic?
Yes. Well, frustration building, I guess, is the key point, because like everyone, you come into the markets and you listen to podcasts, like you listen to your podcast, and there's so many great episodes. Everyone should listen to all of them.
Thank you.
But the problem is, and it's not just this podcast, it's all of them, there's so many different approaches.
Yeah.
It's like, oh, this guy does this. That's cool. I'll go and investigate. Oh, this person does this. Oh, this girl does that. And, before you know it, you're massively overwhelmed. You have no idea what works. Everyone has conflicting information, and you kind of don't know where to turn. And I was at this point because I had tried fundamental analysis. I'd tried buying, new companies with new and emerging products that were just kind of exploding onto the market. I'd tried using analyst kind of recommendations and broker reports. I'd tried looking at charts and drawing trend lines and support and resistance. And I tried indicators, and I tried tip sheets, and I'd like all of this stuff.
Yeah.
I tried, short term. I tried longer term. I tried buy and hope, and all these things. And it was all frustrating for different reasons.
Yeah.
And that frustration was like a real challenge. Like, it's hard, because I was like, I think there's something here, because I see lots of people making money, but I wasn't making money. And so that frustration, for me, frustration is a trigger to drive curiosity. And I think that's really important. And I had a session with my my mentoring group earlier today, and the idea of curiosity as a primary driver of success in trading came up again, because this is one of my things when I say to people, you've got to be fascinated by the markets. That came from, for me, my first fascination experience was that game. You've got to be fascinated by it. But you've also got to be curious about it. And because there's so many frustrating parts of it, like when you're learning, you've got to learn to make money. You've got to learn different techniques. You've got to figure out what mistakes you're making. But all of that, there's a lot of negative feedback in there. And if you'll let that negative feedback turn to frustration, this game is unwinnable, I believe. But if you'll let that negative feedback turn into curiosity, which drives you forward to investigate and learn and understand something, then this game is winnable. And I think that's really, really key. So I had all of that frustration. And so I got curious, like, okay, why are these things not making money? Why am I having trouble with these different techniques? And somewhere on the bookshelf back there, but I read Market Wizards. And I just stumbled across it. I thought, okay, cool. It's like the modern day podcast. You read the approach of lots of different traders, but I did it differently. I read it with curiosity. What are these people doing? And which of those approaches resonate with me? And I basically went through the book, and my original copy has got notes scribbled all over every single page. Love this, don't love that, can't understand this, wouldn't do that, don't have the skills to do that. That really kind of fascinates me, etc. And so I went through that book, and I basically just crossed out, no, not going to do that, not going to follow that approach, not going to follow that approach. That won't work for me. I can't do that. This is my approach. Systematic trend following was the approach. I was just like, for me, that's just perfect. Yep, just made sense. And so I started investigating that because that resonated. I was fascinated by it. I was curious about it, and I just went deep on that strategy. And when I turned on my first systematic approach to trend trading stocks, my equity curve literally turned on a dime.
Wow.
Now, it's not always going to be that way. I was a bit lucky. Like I turned it on. There was a couple of good trades. I didn't have massive drawdown at the beginning, but my confidence shifted on the spot. My equity shifted on the spot. It started moving in the right direction. All of a sudden, I was a trader.
Yeah. Well, what a story. So you mentioned that you were speaking to your father about, you know, how do I retire, and trading was an option. What kind of feedback did you get from your family and friends about you wanting to be a trader? Because sometimes traders,
getting heavy, man.
well, sometimes they get a lot of support from their family, and it's really helpful. And other times they're like, "You are nuts! Don't do it. You're crazy." So,
well, actually,
you?
good question. You kind of got me on a raw nerve there, which is
okay.
good. Exactly what we need. I didn't expect it. The general public, and in most cases, our families included, don't understand this.
Yep.
So what, you're gambling on the stock market? You're buying and selling, like, you know, that's just like going to the horses, right? It's pretty much the way most people view this. You know, putting money on the track or on the sports game, like, how's it any different? And it's all about frame of reference, right? And experience. And my family's experience at the time, buy and hold good stocks forever, grow gradually, get some dividends. Not terrible advice, but for me, not great, because I have a much shorter attention span than that. I'm much more technically oriented. I'm fascinated by the movements in the market. I'm interested to see, how do people get in and out more actively and make money? So there was a disconnect between my family's experience and what I was interested in, which made it difficult to have that conversation. Not impossible, but just more difficult. Added to that, the only person our family knew who was an active trader, the only person our family knew, was a futures trader who worked. I didn't even know where he worked, because I was quite young when I knew this guy. But I think he was worked for a fund, and he was massively stressed out, always vacant, always working, always absent. I meant to say, like he wasn't there. You know, family functions. He was distant relative to us, but we had sort of confined family functions. And he wouldn't turn up, or he'd come late, or he'd leave early, or he'd always be stressed and whatever. And so that was the experience of the trader, right? Oh, you don't want to be that.
Yeah.
And so that's been a hard thing to shake, because that was the early kind of model of someone who trades for me, and also the expectation of what it meant for my family. And so there was a lot of reconditioning, I guess, to get past that mental image of, oh, you know, trading doesn't have to be that way. And when I started trading, I was spending 4 or 5 hours a night researching and looking at charts. And particularly when I was going through my technical analysis phase, I was looking at dozens and dozens of charts every night and checking indicators and lines and levels and trying to make decisions. And it was hard work, long work, and uncertain. But then when I got to this point and I realized systematic trend trading of stocks was what I wanted to do at the beginning anyway, and I flicked that switch, that all changed. All of that time, effort, energy just went out the window, became completely irrelevant. And it came down to opening my computer, opening the software, pressing the scan button or the test button or explore button, depending on the software you're using, to find the setups for the next day, writing them down, and then on the bus in the morning or that night, depending on where I was at, placing the orders with the broker. And that was it. So that's very hard to explain to someone who doesn't understand trading. It's like, what, you mean all you're going to do is press a button, get signals, and place trades, and you think you're going to make money? Like, what?
Yeah.
Like, there's some challenge we've got with our community, because our community, our circle typically doesn't understand trading. Because all of the work is not in the pressing of the button and placing the order, right? The work is what goes into that to create the rules and validate them and build confidence in them so you can follow them come hell or high water in the markets. And there's a lot in that. And this is one of those reasons that it's hard.
Yeah.
I don't know. Does that answer the question?
Yes, you did. You answered it very well.
Okay, good.
Yeah. I want to, before we move on to the next defining moment in your trading career, I want to ask about this transition from I guess, the corporate life into full-time trading. So I imagine back then the role that you spoke about, you're probably getting paid pretty good money. And then you're thinking, okay, so how do I transition into being a full-time trader and get rid of the corporate gig?
Yes.
How did you decide when was the right moment? What were you looking for to flick the switch?
Yeah, this is a good question, and it might be an answer that some people don't want to hear. Because at the end of the day, to trade full time, wife, kids, family, you know, I wasn't a single guy who was 18 living on a shoestring. So in order for me to leave the corporate world and trade full time, like, I needed a lot of capital. So it wasn't just, 50 grand, cool, here we go, I'll trade for a living and see how it goes. It wasn't like that. The year I quit the corporate world, my salary was something like $230,000, I guess, in inflation adjusted terms. Now, like, I don't know, it's more. It would be more now. It doesn't sound like that much now, but it's still a decent wicket. It was a pretty moderately senior job in finance and strategy in a big Australian corporate. But to earn that money, I was working between 5 and 7 days a week. Like, certainly 5, of course, but most weekends I would work at least 1 day, sometimes 2 days. I would work 12 to 16 hours a day, particularly when there were big projects on, and it was just mental. I was stressed out of my mind. My quality of life was bad. My health was holding up, but I couldn't have done it for much longer. And that year, I was working like that, just working like a dog, and I made reasonable money, but not for the time and energy and anguish that I was putting into it. And at the end of the year, I looked at my basically earnings from the job and I looked at my earnings from trading, and I'd made more money trading than I'd made in the corporate gig.
Wow.
So, well, okay, like this lifestyle is devastating. Bad for me, bad for my relationship, bad for my relationship with my kids. And I'm not enjoying it. So at that point for me, it was easy. So, well, okay, I'm making a similar amount of money. I've got enough capital now. Let's go. Let's give it a crack. So I just said to my boss, like, I'm out. I'm not doing it anymore. I resigned. I said, I'm going to trade for a living. And the rest was sort of history from there. But the key to enable it was I had the capital. And I had the capital because I had been trading consistently for years at that point. And you don't make $250,000 in profit in the markets with a $50,000 account. It's got to be way bigger. You know, it's it was a high six-figure account at the time, and my returns were volatile, as in they moved around from year to year, but consistently pretty good. And so what was I looking for? I had enough capital to be able to make the leap and not worry if I had a bad year. I had set up, so I had been trading that way consistently for many years. So I knew what I was doing. It wasn't just, trading. Oh, here's a system. Oh, cool. I'm making some money. Oh, quit, work for, trade for a living. It was a long-term kind of development.
Yeah.
I had also set up my life so that we were low risk. Many years, several years earlier, I'd already paid off the mortgage, the home loan, out of the trading account. I made trading profits. Like, okay, we'll just de-risk ourselves. We'll get rid of that. We didn't have any debt. We managed our kind of lifestyle, I guess, so that it wasn't lavish. I'm not a Lambos and private jets sort of person. I think that stuff's stupid. And to be honest, I don't. Apart from billionaire hedge fund managers, I don't think anyone who really trades does that sort of stuff, because it's stupid. Once you learn how to trade and you know what drives success, it's not that behavior. And so therefore you don't do that. And that's what makes you successful. So, I had a pretty modest lifestyle, and I was comfortable that I could give it a go.
Yeah. I think you raise a really good point there, because it sounds like your expectations were quite mild. Traders, or a lot of traders, come into this game. They've got a small account, whether that means 5K or 50K, but they've got these huge expectations. They don't kind of reverse engineer. Okay, what percentage do I need to achieve to get that? Is that realistic? What do hedge funds and more advanced traders do? What about tax? What am I going to do? Am I going to take that out of my funds every year, or what? And they don't consider all these other lifestyle factors as well. Like you mentioned, you've got the mortgage and the kids and the car and all that. And so I think that a lot of traders come in with they're undercapitalized, and they're they've got the wrong expectation, and they're setting themselves up for failure even before they begin. So
I think that's true. It's a bit of a catch-22 situation though, right? Because if you come into the markets with $5,000, and I started with $7,500, right? But if I'd have taken my $7,500 and thought, right, cool, I'm going to retire, how much money do I need to support my lifestyle? If I'd have done that calculation at that point, that might have been a little disheartening. It's like, I'm actually a long way off, right? But at the same time, I'm not a get rich quick sort of oriented person. I mean, it would be great, don't get me wrong, right? I'm happy with big years and good and strong performance. But what I mean is, I didn't come into the markets thinking I was going to retire on a $7,500 account.
Yeah.
I knew that I would have to build my capital and compound it, because I'm pretty good at math, and 20% of $7,500 is not much, right? So I understood compounding, and I knew that it was going to take time. And I think that giving yourself patience and giving yourself permission to take time is a really important first step. Not take time to learn. Don't take too long to learn, because that's a mistake, right? If you spend 5 years blowing up 3 different accounts or 4 different accounts and studying again until you finally get it, like, that's bad, because that really destroys future wealth. Yeah. I calculated one time, you might find this interesting. It took me 3 years to get profitable once I started trading. I didn't blow up any accounts. I just basically went sideways, up and down a little bit, and I wasn't consistent, and I didn't have a real edge. The thing I had going for me was risk control, because the first book I read, or probably the first trading book I read, taught me about the 2% rule, right? No more than 2% risk on any one trade, which incidentally is way too much. That's in my view now very aggressive, but it was enough to keep me alive. And I took 3 years to get profitable. And I calculated a few years back how much that 3 years cost me in terms of lost compounding.
Oh, yeah.
Millions. I was like, oh, for a time machine, right?
Yeah.
But this is why when I say to people who are getting into trading, like, you need to learn well and learn quickly. Don't rush it, as in be reckless, but don't faff around trying to figure it all out on your own, because that might take 5 years, and that 5 years is expensive. To your future self, it's expensive.
Yeah.
Geez, man, I wish I could go back and put the right book in my hands at the beginning.
Yeah. So then, you've dropped a lot of good nuggets already in our chat. So for someone who was either in that moment now where they're thinking about, should I start trading, or maybe even some traders now who are thinking about, I've got this corporate job which I don't enjoy anymore and I want to go to trading. What kind of advice would you give those people? What do they need to consider?
Yeah, good question.
There's actually 2 questions in there. I probably shouldn't have mixed them together, but
no, it's okay.
I'll let you handle it.
There's a story I want to share, which I think would be helpful. And it's the bus into the city features pretty heavily in my corporate history, mainly because it took me an hour to get into town from where I was living, and it was crowded, and I didn't really particularly enjoy it, but I did use it for my trading time. And I've been trading for a while at this point, and that's how long? It's probably about 3 years, no, 2.5 years, I'd say, after I kind of flipped the switch and went systematic. And I was on the bus on the way into the city super early one morning, and I was doing my analysis for the day because I had a little laptop. I'd download my data, I'd do my analysis, and then place my trades when I got to the office when I left early, which was frequently at that point. And I was doing my analysis, and I had $34,000 in my account. And I started with 7.5. And I was like, had this realization of, oh my God, it's working. I'm gonna make it. And what was great about that moment is I felt free. I wasn't free. I didn't have any right to, because I didn't have anywhere near enough capital to trade for a living and support my lifestyle. But I knew I had an approach that worked for me. And I had evidence to support that, because I had been following my rules. I'd been making money. My account was growing. And hell, I even started to pay tax because I was making profits on it. So I knew at that point that I was going to get there. And so what I'd love for people to do is look for that confidence as a first step. Because once I got to that point, I was like, I'm going to make it. And all of the corporate stress, all of the struggles financially, just calm down a little bit, because I'm not doing this forever, right? I'm going to get there. And it took years after that, because obviously I had to compound the account and put more money in and everything. But that's the pivotal moment. Most people look to handing the boss the resignation letter and doing the, flipping the bird and on the way out as the pivotal moment. It's not. The pivotal moment is when you know that you're going to get there. And the sooner you can get to that, the freer you are and the better you'll trade.
Yeah. Well said, Adrian. Very inspirational. You actually got me thinking about the time when I quit, and I thought my pivotal moment was, I remember when I was walking out the doors of the office and the glass opened and I stepped out and I was like, whew. But now that you talk about, I think my pivotal moment was years before, when I knew it was going to happen. It was just a case of timing. When was it going to happen? So
Yeah.
I think you might have just shifted my perspective a bit there.
Yeah, good. And that's great.
Yeah.
And what's interesting, when you reframe the pivotal moment like that, it becomes a choice about, all right, under what conditions do I want to do it? How much money do I want in my account? And how much certainty do I need that I can make this work and not draw down to a point where I have to go back to a job?
Yeah.
Rather than frustration of, I can't do this anymore. I'm out. I quit. And then, okay, I better make trading work. It's like, ooh, if you're in a situation where you have to make trading work, that's a tough place to be, because mentally it really mucks with your mind. Your trading psychology is super important to maintain.
Yeah. Yeah. All right. Well, that sounds like a good spot to end our first defining moment. Lots of great stuff there. So thanks for sharing.
Pleasure.
I want to move on now to maybe a not so positive event, and that is uncomfortable drawdown. So can you take us back to a moment when you had your most uncomfortable drawdown? Where were you? What was happening in your trading? And why was it so uncomfortable?
Yes, I can. There's been a few. Let me do them in chronological order, because there's three.
Okay.
Is that okay? Right. I'll try not to stay
sure.
too long so that we can get into it.
Yeah.
The first one was not so much about the drawdown as what led to the drawdown. So we had, at the time, I was living in a small 3-bedroom townhouse. There was the spare room where we had set up as the study. And I was doing my back testing in a corner in that study. It was, shared between my now wife and I. And I had been systematic for a little while. Let's say, it's been about a year. And I was doing my analysis, and I was feeling very uncomfortable about my trading at that point, because I had loss after loss after loss. And I was in drawdown. It wasn't catastrophic. I was risking a very small amount of money. So it wasn't the depth of drawdown. There was a fact that I had, if you can believe it, 27 losing trades in a row.
It's going to be tough.
Can you imagine how hard is it to keep pulling the trigger, like buy, stopped out, buy, stopped out, buy, stopped out, and again and again. And this was, it was over, I'm going to say, a month and a half. And I was systematic. I had backtested my strategy. I knew it had an edge, but I won't say I was an expert at backtesting system development by any stretch of the imagination. I knew enough to be profitable, but there were some gaps, let's say. And I was sitting there, I was like, it's not working. Like, it's broken. What do I do? Yeah. Do I pull a pin? Do I keep trading? Do I stop trading? Do I take my cash out? Do I close my positions? Like, this sort of escalation of questioning of myself and what I was doing was what I was feeling. And it was like getting faster and faster and faster. The more losses I had, like, the more frantic that second guessing of myself was. And if anyone has been trading for a while, the markets put pressure. It's not personalized, right? But the market does things which creates mental story and pressure for us as traders. And so I was panicked. Like, 27 losing traders in a row. Like, I thought my system was profitable. It's not working. What do I do? Why is this? But again, back to what I said earlier, I flipped the switch of curiosity on. So, well, I didn't expect this. Why is this happening? Like, on the charts, in the markets, what is the behavior that's causing it? And as soon as even just now, reliving it and then making the switch to curiosity rather than panic or fear is uplifting in terms of how I'm feeling, right? And I'm human. Like, I still have emotions. I'm not a trading robot. And particularly when I go relive the past, I can remember the emotion in my body. And I remember when I flicked it to curiosity, it's like, okay, something's different, or something's weird, or I missed something. What was it? And I threw myself into the research at another level. And I've done this at a couple of points in my trading career. It's like, okay, I'm obviously missing something. Let's just go deep and figure out what the hell it is. And at that point, like I threw myself into it, and I figured out, like, it's just a stupid mistake. I just missed it. My stops were too tight. And the market had shifted from being in a very clean, smooth trending phase to having enough volatility that my stops were getting hit all the time. And I had the interplay between stop loss, position sizing, and so on in the system. I didn't have set in a way that worked for me, for my psychology. I mean, I could argue that most people can't tolerate 27 losing trades in a row. That's pretty tough, but it was well outside my comfort zone. And I had missed the fact that I could fine tune my system to make it easy for me to follow just by adjusting some of the parameters. And yeah, I might sacrifice a bit of theoretical backtested profit, but it would be followable and it would keep my psychology intact. And so that 27 losing trades in a row, the resulting drawdown actually wasn't that big because I was risking a very small amount of money. But that panic was the first thing that I felt. And that was my first real deep dive into, I've missed something. What was it? And so finding that was pivotal to my whole journey henceforth, because that was the realization that my systems have to fit me. Because the system was profitable. It's just that it went through a phase with a lot of losses that I didn't want to cope with. So that's the first one.
Yep.
Is that deep enough?
Yeah. I was going to just ask you before you move on to the next one. I think it's common in drawdown. There's I guess a temptation to either switch stuff off or adjust it, adjust strategies, or even just switch strategies out if you've got enough. Now you spoke then about adjusting the strategy to suit your needs. How do you determine that you're not just doing it because of a fear or emotion, and you're actually doing it for a logical reason? Like, there's got to be a balance somewhere, right?
Absolutely. Yeah, no question. Again, in my mentoring session this morning, I said something to the group, and it was, we have to make our decisions on facts, not fear. Okay. And so if you're making a trading decision from that state of being panicked, oh, I need to turn my system off, or, oh, I need to widen my stop or tighten my stop, or, any decision where you're feeling kind of panicked or agitated or hypo, then that's not a good place to make the decision from.
Right.
And I was getting to the point where I was really nervous about taking the next trade for this 27 losing trades in a row. I didn't want there to be a 28th, right? Let's be honest, I'd had enough.
Yep.
But because I went to curiosity, like, why is this happening? My whole mental state changed. And I could then seek understanding, which allowed me to make a calm decision based on the analysis, not based on the feelings, the fear, or the desire to avoid another losing trade. So I figured out what the problem was. My stops were too tight. Turns out by quite a margin. I subsequently trade with much wider stops. And then I investigated the performance and the way the system dynamics worked as a result of widening the stop. How do the trades play out? How long do you hold winners? How long do you hold losers? What's the difference between how winners and losers play out? How long could I be holding something that gets triggered? Because I realized at that point that the system didn't fit my psychology, I looked deeper into all of the different aspects of the system to make sure that I understood what was what could happen. And by seeking that deep understanding, and by backtesting, using a fairly rigorous process, by that point I was getting much better at it. By the time I got to the end of this investigation, I understood the profit loss dynamics of how the system actually generated return. Right. So it wasn't an emotional decision, it was an analytical decision, and it was a decision of matching okay, the system works over a wide variety of parameters and configurations, but I'm most comfortable in this set of conditions. So therefore, this is a configuration of the system that made the most sense for me at the time. Now, I was trading manually at the time. So I was actually having to pull the trigger manually on every single trade. I'm now fully automated. So it's a different way of thinking when you're fully automated and you've got a portfolio of many systems and many positions on at any one time. That's different. Back then, one system, all manual. So the psychology is a bit different between those two.
Yeah.
So.
Yeah. But I really like the way you kind of you reframe the entire experience. This drawdown is typically a negative emotional experience, and it's actually become a positive for your trading because you've had, like, I guess, a big surge in knowledge of understanding your own trading psychology, the markets, how your strategy works. It's really become beneficial to experience that kind of drawdown.
Yeah, no question. And look, it's great to think, okay, I'm going to come to the markets, I'm going to start making money straight away, and some people do. Typically, they do because the market conditions are such that it's easy to make money, and you happen upon a strategy that's working. It doesn't necessarily mean there's an underlying skill there. I think the fact that I had that experience early on was really important. And I say to some of my traders now who get started, and it's like, oh, I'm still in drawdown. It's like, well, good. Stay in the game, learn the lessons, because in 20 years' time, that is going to be your pivotal moment. It's powerful. You've got to learn, but you've got to flip that switch to get from panic, fear, and financial lack to curiosity.
Yeah.
So that you can get the learning and go deep on that. That's the key to making it valuable.
Yep. I think just thinking back through all the traders that I've spoken to on the show, long-term successful traders, and pretty much they all say that their successes came out of drawdowns and challenging times. Unfortunately, that kind of catches a lot of traders, and it also forces them to quit, or they can't stand it anymore and they just stop trading. So I think, like as you mentioned, if you can work your way through the drawdown, become better, be curious, figure out what's going on, how you can adjust, that's a recipe for long-term success, I think.
Yeah, absolutely. I completely agree. There's one other piece of it which I think is important to call out. We'll do that.
Sure.
I want to do that right now because I think it's important to have it next to each other.
Okay.
You've got to get through that drawdown psychologically. You've also got to get through it financially. You can't win the game if you're not in the game.
Yeah.
If you blow up and you leave, or even if you blow up your account and you have to leave temporarily to save some money to start a new account, you're out for a period of time. You can't win the game if you're not in the game. So we have to stay in the game. And this will come back when we talk about my longer and deeper drawdowns in a little bit. But for anyone who's new, you've got to trade in a way that will keep you in the game. That's different to trade in a way that will make you the most money. Because if you can stay in the game, then you have a chance of learning the lessons and then surviving long term. But it's no good trading and making a ton of money now if you blow it up next week or next month, because you're back to zero. So trade as if you were a multi-million-dollar trader, so that one day you can get there, rather than trading small recklessly, hoping to build your account quickly so you can be a multi-million-dollar trader. That doesn't work. So use those challenging experiences to get curious and go deep. Trade in a way that will keep you alive. And that means small position sizing, low leverage. Don't worry about making money, because the money will take care of itself eventually.
Yeah. Well said. So let's move on to the longer and deeper drawdown you mentioned. I'm interested to hear all about those.
Yeah. So my deepest drawdown ever was 27%. And, that's within my comfort zone, right? So I wasn't stressed about that level of dip. I had already set, 30% was kind of my tolerance. I designed everything according to that. What I wasn't prepared for, and this was post the 2007, 2008, global financial crisis. I had made a lot of money on the way up. I had a great couple of years. It was just ridiculous. And then the market turned, and because I was a trend follower primarily at the time. Obviously, at the turn of the market, you give back a fair bit of profits, which was fine, expected, right? So that was the drawdown. So I went from a peak, down as the market turned, and that was as expected. Then my short systems kicked in because I had diversified my strategies a little bit since then. And as the market continued down, I started getting more and more shorts, and I had made some of that drawdown back. I was too timid on the short side, so I didn't make all of it back. But it certainly buffered the losses a little bit. But eventually, the regulators started stepping in. They banned short selling on different stocks. They were suspending short selling on a bunch of stocks. It got harder and harder. And so I sort of ran out of shorts, essentially. And then my system stopped signaling because I was only trying to capture the middle sort of two-thirds of a bear market. And so I made good money. I actually had, if you can believe it, I had a couple of shorts that went to zero. So it's 100% gain. Like, you can't do any better than that. Yeah. And as I was holding a stock, it's like bankrupt. I didn't actually expect that would ever happen. So it was great. But I wasn't out of my drawdown. And then my short systems stopped triggering, and my long systems were very conservative about getting back in. They waited for a lot of proof that there was a bull market. And that really stung because I went 9 months with no signals. 9 months, day after day, updating my data, running my scans, nothing. Update my data, run my scans, nothing. Like over and over again. And I was adamant about my long-term trend following until this point. It's like, oh my God, like, how do I keep doing this? I've got nothing to do. And it was an exercise in stubbornness and consistency, let's call it dogged consistency more than anything else. It's like, I am following this system come hell or high water. And 9 months, literally no signals. And I did it every single day. Didn't miss a day. And that sort of, like, I wasn't making money. If that was a job, that was the worst paid job in history at that moment.
Yeah.
It's like day after day doing this work. And it's not a lot of work, right? But it's some work. It's some impost on my life. But trading is like that sometimes. Sometimes you do the work and you don't get paid. Sometimes you do the work and you have to pay for the privilege of doing the work in terms of drawdown and losses.
Yeah.
Sometimes it's so easy to make money, it seems ridiculous. But we have to cope with all of those. And that was my first real lesson in sometimes you've got to sit on your hands and do nothing and wait. But you've got to follow your systems to do nothing. And so that was really tough, 9 months of inactivity. And then I started getting signals and it was fine. We're off to the races again. But I learned a couple of things. I don't really like doing the same thing over and over again with no outcome for 9 months. That wasn't fun for me. So I needed to diversify more. I realized I needed some different strategies in my portfolio. I needed to get back into a new bull market earlier, a lesson I relearned in COVID. Again, I had got in earlier, but not early enough. So trading is interesting, right? Because I treat it as like a personal development exercise.
Yeah.
It's more, for me, it's more about what can I learn about myself and what I'm struggling with and how I'm sabotaging it, or what my belief is that's preventing me from profit. That's the interesting bit. I get curious about that, and I keep learning these lessons. Like, oh wow, was I doing that before? And that's why trading is fascinating, because the more you learn about the self, the better you become. And then you discover you're still not perfect. It's like, oh shit, I'm still doing that. Oh. Okay, here we go again. What's the lesson? Let's get curious. Let's go deep. Let's investigate. So that was the big lesson. So yeah, I think that's probably the key one is learning that it's okay to do nothing, but you've got to do nothing according to the system.
Yep. So it sounds like curiosity there again was a big aspect of you. Accelerating, maybe not accelerating, but expanding your trading understanding and your systems and building up a portfolio.
Yeah, no doubt. I mean, coming out of that experience, it was the curiosity to understand why did I not get signals? What about me was preventing me from doing other things in the markets that would make money? And that's the point. That deep dive is what led to my diversification of different strategies, different markets, different timeframes. I was long, short, trend following Australian stocks at that point. Up until that point, it's like, okay, 9 months of inactivity. This is kind of frustrating. Why? Why am I not getting signals? Why don't I have strategies that are working? Why have I not been able to find it? Because the problem was not that no one was making money. The problem was I didn't know how to make money any other way. Because I had set up this belief that trend following was the way to make money. And I still it's a great way to make money. It's not the only way to make money. I was just a bit too dogmatic, let's say. But my deep dive curiosity went to, other markets. Mean reversion. Swing trading. All of these and then I was like, okay, I opened up a bit. I loosened my dogma and I started discovering other strategies that worked. And that led to my diversification.
Right. So that was the second drawdown. And you've got a third one for us?
Yeah. This is not a portfolio drawdown. It's a strategy drawdown.
Right.
If that makes sense. And it's recent, right? It's well, not now because the markets have started to turn around a little bit, but if you look at the Australian stock market from 2021 to 2023, if you look at the main indices, it's kind of just, it's range trading. And that's led to another situation, not like the 27 losing trades in a row, because I'm a bit more sensible now. I've got wider stops and so on. But certain strategies have had long periods of drawdown. And it's not that they're not trading. It's that the drawdown is long and they're still trading. So in 2008, when my systems turned off, I wasn't trading. There was nothing to trade. There was no signals. And I was sitting in drawdown inactive. That was one problem. The problem was some of my strategies recently, like in this 2021, 2022 period, was that they were trading, but they were getting chopped up. The regime filter was on, then off, then on, then off, then on, then off. So I was in and out and in and out and long and short and long and short. So it was like that. So that there was a period of frustration with certain strategies because they were indecisive. And the same thing happened with crypto at the same time, because we had a crypto bear market, then FTX collapsed. And so then, basically crypto bottomed out. And so my crypto account was in a bit of a drawdown as well. Not catastrophic, well within my tolerances, completely fine, but it was in drawdown and it was still trading. At this time, fully automated. So I was seeing these trades happen. I was monitoring the systems, but it was just, okay, do I keep doing this? They're not working. Do I turn these systems off or not? Back to that same question. And I didn't. I had faith in the systems, and I know I've been trading almost 25 years or something now. I knew systems go through phases where they don't work. They're out of alignment with the markets. And if you'll just trade through, then you come out the other side and they keep going. But when you're in it, it's hard. The system's getting chopped up. It's still in drawdown. It's still taking trades. Do I really want it to keep doing this? But it's like, no, I've learned the lesson. Let's just stick with the systems. I've tested them. They're not broken. All of the stats are still in line with what I expect. The drawdown was within its maximum tolerance. It's just a long drawdown for that strategy or those strategies that I'm talking about. I had other strategies that are working, which kind of helps. But that experience of the strategy giving signals and staying in drawdown for a long period of time is one which is very challenging. and I just followed through with this. I was sort of okay, but I had a lot of other traders that I work with experiencing that frustration. Like, do I turn this off now? It's obviously not working. And that's about confidence. And again, being stubbornly determined to follow the system. If you don't have the confidence to follow the rules at all times, then you shouldn't be trading, at least not trading that set of rules. And so it was a test for me, I think. And I'm thankful that I passed, because like some of those same crypto systems, for instance, were up 40% in the last month. It's like, ooh, okay. I'm glad I kept trading, right? That doesn't happen every month, just so I'm clear. But when it does, it's nice and I'll take it. But that's the reward for dealing with the pain. And that's the reward for being consistent, because as long as the strategy is not broken, you come out the other side. But you've got to have the confidence to get through that period. And how do you build that confidence? Well, you've got to go deep on backtesting and understanding what's possible, and making sure that your tests have covered a broad range of market conditions, and make sure you've done the thought experiments of, okay, well, what would happen if the market was in a sideways ranging market for a phase for an extended period of time? What would happen to this strategy? What would happen if the market suddenly tanked and dropped 20, 30% in a short space of time? What would happen if it went into a very strong, smooth bull market? Like, you can answer some of those questions in backtesting, but you've also got to do some thought experiments. And I found that mental rehearsal of thinking through how that would play out, how those things would play out, very helpful in building the confidence to stick to my guns when I needed to.
Right. So it sounds like every drawdown has given you a different insight or a different lesson. For people who you love drawdowns. Quote of the show: I love drawdowns. We got to get a T-shirt.
Yeah, that's right.
I love drawdowns.
Very good.
It's easy to laugh about, but obviously as well, it can be very challenging for traders. So for people who are perhaps in drawdown now or struggling with losses, what would your advice be to those people?
Firstly, I would say, like I've said a few times this show, get curious. Like, go deep and actually figure out factually why you're in drawdown. Look at each strategy you're trading. If you don't have a strategy, there's a clue as to why you're in drawdown. If you do have a strategy, look at those strategies and go deep and understand what is the performance of each of those. Is it in line with the long-term kind of expectations of that strategy? Look at the, without going into a whole kind of lesson on backtesting, but look at the trade level statistics and see how stable they are. Look at the level of drawdown and see if it's within the tolerance. Look at the daily price behavior and see if it's characteristic of what you've seen in the past. And just go deep. Just get curious and investigate, and keep notes and learn from it. If you've only got one strategy, then you're going to have deep drawdowns and long drawdowns at some point in time. If you've got multiple strategies, multiple markets covering multiple timeframes, then the drawdowns get shorter and they get shallower because you've got good diversification. They don't go away, unfortunately, but they do get easier to cope with. So if you've got one strategy, understand that one, and then take it as a lesson to diversify.
Yep. Be curious.
Yeah, be curious. Absolutely. It is the number one trait that I feel will make traders successful. Two traits: fascination with the markets, because you need to be fascinated because it takes work. It takes time, and you're gonna spend a lot of your life doing it. I've been doing it for 25 years. I'm still fascinated. If I wasn't fascinated, I wouldn't be trading. And then curiosity. So fascination and curiosity, they're the two things that you want to cultivate if you want to be long-term successful, I believe.
Okay, great. Well, do you have time to go to a third defining moment?
Sure. What have you got in mind?
I was thinking about wins.
Wins, yes.
We've talked a lot about drawdowns. So how about let's talk about a big winner. Can you take us back to a moment when you had a really crazy big winner? When was it? What was happening in the markets? How did you feel about it?
Yeah. Good question. This was leading up to the global financial crisis. I had I don't have the chart in front of me, so I don't have the exact dates, but I had a long-term trend trading system. And I don't know if you've ever I know you're a futures guy. Have you ever backtested a trend trading system in stocks?
I have, yes.
Yeah. Okay. Cool. So, you see those outliers in the back test. It's like 1,000% gains. Like, ooh, I better be careful because if I optimize my system, I'm going to curve fit to that trade because it's so big that you end up just adjusting the parameters to fit that trade and maximizing the profit. Anyway, this trade was in Insight Tech Pivot. I don't even know if they exist anymore. They certainly haven't been trending so well if they do. But it was like one of those outliers.
Mm-hmm.
And at the time, I had a trend trading system, and I pyramided in 3 times in this strategy. And I bought it, and it went up, and I got another signal. I bought it, and it went up, and I got another signal. And I bought it. It's like, okay, I'm fully loaded. Let's see what happens. And it just kept going, and kept going, and kept going, and it was over months. The move was 18 months long.
Wow.
And there's a couple of learnings from this, some good, some less good. Have you ever noticed in the stock market that things don't move in a nice straight line? Funny, right?
Yes.
But it would be nice if they did, but they don't. And so because I'd pyramided 3 times, which I don't do now, incidentally, because I don't like the volatility. I sort of reduce my volatility by just taking a single position in each stock and instead go across multiple systems. But I pyramided in 3 times. And so that position was fairly big, not riskily so, but it was a fair part of my portfolio at the beginning. But the move was so strong that as it grew, my portfolio basically became this stock. Essentially, right. It moved, my portfolio moved. And by the end of the move, the volatility in that position, the volatility as in the how much that fluctuated from day to day, week to week, was bigger than from week to week, let's say, was bigger than my account size at the beginning.
Wow.
It was a monster.
Wow. Yeah.
But it's why trend trading is, I believe, so amazing, because you get on a move like that and it's life-changing. You say, okay, but that was luck. It's like, well, was it? I mean, I went through 27 losing trades in a row on a trend trading strategy. And this was an evolution of that strategy. I followed that system, with rugged, dogged determination for years.
Yeah.
And I took winning trades, and I took so many losses, because you do with trend trading, because most of the breakouts are false. But what you're doing is you're hunting the big winners. And when you get it, what have you got to do? You got to hold on.
Hmm.
And it was a bit of a wild ride. And so that taught me about patience, about not being greedy, because if I was greedy in the short term, I'd miss out in the long term. Because I bank my profits so I can, had a big win. Yes, at 100% gain. I could have done that. And I thought about it multiple times. Should I take some profits? Should I take some profits? Should I take some profits? But I didn't, because I didn't want to be greedy now and suffer later as a result. Because what if this was the one?
Mm.
And it turns out it was the one, or it was one of the ones, so to speak. Because it just went. I made something like 130 R on that trade, like 130 times my risk.
Wow.
And it was just, that's why I like trend trading. But so I learned to sit on my hands and wait for the sell signal. In the other drawdown we talked about, I'd learned to sit on my hands and wait for the buy signal. You've got to do both, because it's no good getting into trades that you shouldn't be in. Like that's bad, right? You've got to wait for the right setup, the right signal to buy. But once you're in, then we start to panic about, I've got a bit of profit. Should I take it? If I take it, I can tell everyone I had a win and I made some money in the stock market. And gee, that would make me a real clever guy, and so on and so on. But you've got to wait for the sell signal. And the sell signal on this strategy at the time was an 8 times average true range trailing stop. Now that's really wide. And it's even more wide because by the end of that move, the volatility on that move was incredible. So the drawdown at the end of the move was certainly bigger than my account size at the beginning of the move. But you've got to be patient, because if I wasn't patient waiting for the sell signal, I would have got out too early and I would have missed out on all of that. But there's another great lesson out of this, which I don't know how. Yeah, no. Let's go for it. Because I wasn't trading stocks. I was trading contracts for difference, CFDs.
CFDs, yeah.
Now, CFDs are a leveraged instrument, right? I wasn't leveraged. I wasn't using it for leverage. I was a little bit leveraged, but I wasn't using it for the leverage. It was just, that's the account that I was trading. And I got this trade, and it was a small position at the beginning, and I was holding it. And 18 months later, towards, not 18 months later, maybe 12 months later, I was looking at my account statement. I was like, all of these interest charges.
Yeah.
Because CFDs charge you interest on the daily exposure of the position. At least my account did at the time. I don't know if it's still the same. I don't trade CFDs anymore. I trade stocks. I want to hold the actual thing. But I was paying out thousands and thousands and thousands of dollars in interest a day, because interest rates were a bit higher back then, just to hold this bloody position. It's like, wow. So I've got all this interest expense that I'm having to fund from elsewhere, and I was peeling off tiny little bits of the position to pay for the interest cost, because that's cash that's going out of the account. The broker wants that money. And so I learned, don't trade with CFDs, because if you get the monster winner, it will cost you a fortune, because it's going to be a long trade. It's going to get big, and the interest costs are going to be astronomical. So that was another, it's like interesting curiosity sort of defining moment. I trade stocks from then on. I can short sell in my account, and yes, CFDs are useful for short-term trading, but certainly I don't do it for long-term trading anymore because it's just too costly.
Right. Yeah. I think there's also a lot of we hear a lot of stories about traders who've had a big win. Maybe it's one particular trade, or they've had a hot year or a hot quarter and have made a load of money, and then for some reason they blow up. Whether it's they get too cocky, or they think they understand the market, they own it, and then they trade crazy, and it kills their trading account. So how did you manage yourself or your emotions so that you didn't do or follow a similar path?
Yeah, good question. It is a common problem. It's kind of like lottery winners. Most people who win the lottery, 2 years later, 5 years later, they're broke again. And the same with traders who have windfall gains. I had been trading a fair while at that point, like quite a few years. I'd been following my systems. I had been making money. I understood position sizing, and my position sizing was linked to my account size. So I had all the things in place to make sure I would stay in the game. And so this trade was the culmination of that work up until that point. I had a system I had confidence in. I had position sizing that was going to keep me in the game. As my account grew, my positions got bigger. As my account shrunk in drawdown, my positions got smaller, like all the right things. And so when I had that trade, it was just another one of those, it's working, right on track. Like, not arrogant about it, not cocky, but it's like, this was why I picked this strategy.
It's confirmation.
Yeah. And at the end of the move, the drawdown was like, yeah, I don't like giving up that profit, but that's what I expected. And so it's, I had understood the strategy deeply enough. I knew what drove the return, and what drove the return in that strategy were the big, long, outsized winners that you got occasionally. And so I just wrote it. And, you've got to understand deeply what's driving your profits. If you're following a strategy and you have a windfall gain, and you don't really know why it came, why it happened, was it normal, will it happen again? Then, there's a temptation to kind of be silly with it. But the other philosophy I have, which I think, again, is relevant to this point, is if you want to be a multi-million-dollar trader, you've got to trade like a multi-million-dollar trader. Not as in trade that big if you don't have the capital, but I mean like this. You've got to have the mindset and you've got to approach it with the degree of professionalism that person that you want to become would have. And at the time I'm thinking, okay, well, if I was a hedge fund manager and I was trading this strategy, what would I do now? Okay, I just close the position. Well, obviously I would do what the system does.
Yeah.
And it just takes the next trade. And when it takes the next trade, it sizes it according to the value of the account so that the risk is linked to the capital you've got. And so I always have that mindset of I want to act like the trader I want to become. And that's really important because most people who come into the market aren't thinking like a professional trader. They're thinking like a gambler. So I want to act like the trader I become. And by thinking that way, when I came out of that trade, it was easy. Like there was actually no emotional kind of trauma as a result of that massive gain at all.
Okay, so people in that situation now, maybe they've got a big open trade, or they've just banked a big win. What would you recommend to those people? What would your advice be?
Well, the first thing is I like to externalize the win as well. Like, yes, reward myself for following the rules, but the system generated the win if you're a systematic trader. So I don't get cocky about a trade that I had because I'm such a good trader. It's like I designed a system, the system found the trade was good, sort of a few steps removed. So I like to keep myself level, both on the upside and the downside. So that's the first thing, stay level. Second thing is keep following the system. What would your system do next? And if your system would take the next trade and size it a certain way, then that's what I would do. Then take it one step further. Think about, okay, how can I now develop my trading so that I can become even better? Because a big windfall gain like that opens up a wealth of diversification opportunities that maybe you didn't have before that trade, because your account's now bigger. If you're trading a $50,000 account, there's so much diversification you can do. If you've got a $500,000 account, there's a lot more you can do. So at that point, what do? Get curious. How can I now expand my trading given that I've got more capital available?
Yep. Well said. So I think you've been incredible today, Adrian. This has been an epic discussion about many more defining moments than three now that I think about it, but a lot of great insights and a lot of amazing knowledge that you've shared with us today. So thank you very much for being so open to this discussion and being honest about your I guess the struggles and the wins of trading. It's not all smooth sailing. So now for people who want to learn more from you, I understand you've got an event, a free event next week, which do you want to share something about that so that people can connect with that?
Yeah, absolutely. So starting, obviously for people listening on the recording, this might be past, but if you're listening right away when this launches, starting on Sunday, Sydney time, 19th of November, we're launching Trader Acceleration Week. And Trader Acceleration Week is about taking your trading journey and accelerating it, getting it through the stages of trader evolution. So in my program, my mentoring program, I've got a 5-stage model to trading mastery, a 5-stage journey to trading mastery. And so over the course of Trader Acceleration Week, we're going to talk through what's important at launch stage, which is getting started in systematic, and then how to stabilize that with confidence and proper back testing. And then once you've stabilized on day 3, we're going to talk about how to diversify and go more broad so that you can profit from a range of different market conditions. And then we're going to talk about automation and setting yourself up for that, and the do's and don'ts, basically what to look for, how to set yourself up before you even think about automating, because most people nowadays want to do that way too early. And then from there on to mastery, like how do you really build this into some material success for yourself? So that throughout the week, we're going through that journey. I'm going to share some more stories. I'll share the tips for success and the things that you really have to do at each stage, because my goal with this is to accelerate the journey. Because what I learned at the beginning, and I think we talked about this, is my first 3 years where I was struggling and I didn't make money, that was expensive. I mean, it cost me millions. When I look back at that, if I had 3 extra years of compounding at the back end, the compounding is really, really valuable. So you want to learn quickly. So my whole goal with Trader Acceleration Week is to get people through that learning curve quickly, show them the path so that you know exactly where you're going so you can get started. And it's completely free. I'm going to be doing an hour of live teaching every single day. And we've got a VIP group where you can come and ask me questions and that sort of thing afterwards as well. So there's a link in the underneath the video. So please register. It's completely free. Come along and let's accelerate everyone's trading journey.
It sounds like a fantastic event, Adrian. So thanks for hosting that. So as Adrian mentioned, there's a link here on the screen. Go-bst.com/TAW for Trader Acceleration Week. And I'll put a link in the description as well. Just go there and register and you can get five days of free training from Adrian, which sounds like a pretty good deal. Thanks for your time today, Adrian. Is there any closing comments you'd like to make or closing statements before we wrap up this epic discussion?
Yeah, look, it really was. It was valuable. Thank you. And I think what I've learned in this discussion is, again, that trading is it's a lot about a personal journey. You know, we've got some things to learn about ourselves as traders to be successful. And in you asking those questions of me, it's like, you know, that kind of gave me some fresh perspective and, gave me a chance to sort of reflect a little bit again about the lessons that I've learned. And I think we as traders need to do that more.
Yeah.
You know, it's a learning journey. It's not a journey to get rich, make money next week. This is a marathon, not a sprint. And if we learn the lessons all through the marathon, we find that we can be more successful later because the market moves in phases and good times and bad times come and go. And we've got to learn from the current phase so that when that type of behavior comes up again, we're prepared. So whatever the difficulty is, let's get curious. Let's learn from it. And that's going to drive long-term success.
Yeah. And as well, I think personally, Adrian, as you were talking about a lot of these experiences, I was thinking back to my same experiences as well and connecting with those. So I think, as you mentioned, I think it is valuable to go back and think about those and the lessons and how we felt and reacted at the time and how we improved from those sometimes challenging moments. So I'm sure everyone who watches this recording is also going to feel the same way. And if they haven't experienced it yet, you've really shared a lot of insights into how people can address those when they come up. So thank you very much for that. I really appreciate that. And for anyone who's watched the show and you want to get access to the show notes, summary points and transcripts and something else as well that goes with the show, I can't remember now, head over to bettersystemtrader.com and you can find this episode and they'll have all the details there. So thanks again, Adrian. Really appreciate you and your time today, and all the best with Trader Acceleration Week next week. Cheers.
Brilliant. Thanks so much, Andrew. Pleasure to be on the show again.